The cryptocurrency market is experiencing a fresh new crash, another collapse. We are seeing Bitcoin hit prices that we haven't seen since 2020, as FTX looks like it is in more and more trouble with Binance backing out of the rescue plan. But don't worry, because I'm going to share with you how the government is going to use this to step in and rescue everybody instead. But in order for you to understand what the government is planning on doing here in the wake of the crypto winter, this destruction, this crash, people losing their money, we have to go a little bit back in time to the Wild West. Real quick word from today's sponsor, iTrustCapital. iTrustCapital allows you to use your retirement account to invest in Bitcoin, gold, and silver. Many people, when they buy gold or silver or Bitcoin for the first time, they just go out and they make the purchase, whether it's from a gold dealer or buying Bitcoin from an exchange. Later on, whether it's a year or 2 years down the road when the price has gone up a lot, they go to sell it and realize they're hit with a capital gains tax. This leaves people with a sour taste in their mouth when investing in gold and silver and Bitcoin because they're saying, hey, look, I know that inflation is eating away at my fiat currency, my dollars, but if I put my money in sound money, if I buy gold, if I buy silver, if I buy Bitcoin, I'm going to get hit with a tax on it anyway. And that's why it's so important to take advantage of retirement accounts when you are diversifying your assets. The problem is most brokerages, most retirement accounts do not allow you to invest in gold or silver or Bitcoin or any other cryptocurrencies. That is where iTrustCapital comes in. You can buy and sell Bitcoin, gold, silver inside of your IRA anytime. You can use this retirement account to make new contributions, or you can even use old retirement account money rolled over into an IRA with iTrustCapital. With everything going on right now in the crypto industry, many people are concerned about any exchange, any place that allows you to buy cryptocurrencies, about security and fraud. With iTrustCapital, they never take custody of your assets. There is no mingling of assets, and there is no way for iTrustCapital to access clients' money. It is securely stored in third-party institutional storage that is cold storage. And it's a regulated trust company so that it is a legal IRA. Like I said, they take security very seriously, which is why I use and recommend iTrustCapital to invest in gold, silver, and Bitcoin for your retirement account. And if you use my link in the description below, there's a special bonus waiting for you as well. Going back just a few hundred years, we get to the time when people use gold coins and silver coins as money. But as opposed to the last few thousand years, things were getting to the point where even gold was getting too expensive, too valuable from the natural deflation that occurs over time with a relatively fixed amount of money. More technological progress, more wealth that accumulates in the system, but a relatively smaller amount of money floating around means less money chasing more goods and services, the opposite of what we have today, which is more money chasing the same goods and services. That means over time, things get cheaper, which means your money gets more valuable. So people didn't want to walk around with an ounce of gold, 2 ounces of gold anymore. They needed somewhere to put it. So these people went to the institutions that said, hey, we will keep your gold safe for you. This worked out well for a while. And you can see here, people got this paper instead. This one is from the First National Gold Bank in San Francisco. You can see here, it says at the top, it's redeemable in gold coin. It is payable to the bearer on demand down there at the bottom, $5 in gold coin. Now, this meant that the monetary system, the rules of money had not changed when people started depositing their gold in banks. Because if you have 100 pieces of gold in the economy, those go to the bank and now 100 pieces of paper trade instead. It's the exact same thing. No inflation, no deflation, the same supply of money. No fraud has taken place. It's still a good system. In fact, this system at first had many benefits because suddenly you can operate across larger distances with less cost associated with sending heavy metal like gold. So there were some advantages to increasing the velocity of money and making transactions cheaper across large spaces. But the banks just couldn't help themselves. I mean, what they were doing was sitting on literally a giant pile of gold in their vaults, and they were looking around and saying, hey, at first, people would take their paper, they'd bring it to me, get some gold, they'd go use the gold to make a big purchase, they'd buy a horse, and then the horse seller would come and bring that gold back to me and get another piece of paper. People realize that's ridiculous. Why are we doing this? Let's just trade the paper instead. Because as you can see on the gold certificate, it's payable to the bearer on demand. These were bearer instruments. Just like cash today, if you have cash, you are able to spend that purchasing power. If you have a lottery ticket with the winning number on it, it's a bearer instrument. It's not assigned to any specific person. These things have value to whoever bears them, whoever owns them and holds them. In the movie Die Hard, that was the whole plot. They were trying to steal these bearer bonds because they weren't traceable. There was no person or serial number or social security number attached to these bearer bonds. It was whoever held the bonds got the value. And so people just started trading the paper back and forth because it was as good as gold. But the bankers, like I said, couldn't help themselves. They realized they were sitting on this pile of gold. They thought up a genius, devious plan to make some extra money. They said, we're going to enter the lending game now. Anybody out there wants to borrow from us? Instead of borrowing from Aunt Sally and she's going to charge you 10%, come borrow from us. We'll only charge you 9%. How were they able to offer below market interest rates? Well, because they're printing money into existence. They just didn't tell anybody. So somebody would come, they'd get a loan, and they'd give them, again, one of these pieces of paper that looked identical to all the other paper floating around out there. But the moment that loan was created, you've done something called lending money into existence. They printed new purchasing power. Now, suddenly, looking at the contract, the legal words on this paper, they are no longer true. They cannot pay to the bearer on demand if all of the bearers suddenly demand to get their gold. So the moment that new paper was issued and went into circulation, fraud had taken place. Now, at various times in various places, this scheme could go on for a lot longer. Sometimes it went on for a lot shorter period, but inevitably what happens is the person issuing the paper just continues to do more and more of that because they realize they're sitting on a gold mine. They can print money and they're just getting crazy rich off of this, just hoping nobody calls their bluff. But eventually, as always happens, people want their money back. So there's a run on the bank. People go to redeem their paper for the gold that is in the vaults, and there's not enough gold in the vaults. Now, again, this has happened time and time again throughout history. But what should have happened? The logical approach, if you are a government looking at this take place, what is the logical response? That's fraud. Fraud is illegal. Fractional reserve banking is illegal, right? Wrong. That is not what governments did. They said, you know what? We don't want you to do this, but we want to be able to do this. So we're going to nationalize this practice. You've got to get a banking license now to be a bank. You've got to operate under our central bank, and we are going to magnify and scale up this scheme so that if there's a run on a bank over here, no big deal because there's a central bank to back you up, and they have the monopoly on money creation now, stamped with approval by the central government. So now we fast forward to what is going on today in the crypto markets. FTX is currently experiencing a liquidity crisis. People hoped that Binance would come in and be able to bail them out, but Binance said the issues were beyond our control or ability to help. So the CEO, Bankman-Fried, is scrambling to find money from somewhere in order to stop the collapse. And now FTX is facing a US Justice Department probe for fraud. This is none other than the age-old scam of fractional reserve banking and then the inevitable following bank run. Bankman-Fried said on Tuesday customers had withdrawn $6 billion. You don't do that if you know your funds are safe. You only do that if you think that they might not be safe. And the ironic thing here is that if everybody does that, then they're right. Their funds are not actually there. This is causing the crypto winter to get even worse with major crashes in even things like Bitcoin. Bitcoin hasn't been this low since 2020. And given the fact that we broke in major support here around this $19,000 mark here, we could easily approach the last prior resistance of this $14,000 mark. And it could easily come down to a stronger support line down here at about 12,000. But just like the government did before, and just like like they always do, they are never going to let a good crisis go to waste. I've said before and I'll say again, they are allowing the entire crypto market to implode from the fraud that has taken place, funded by the easy money the government printed in the first place. All major frauds and schemes always happen during times of abundant and easy credit. Bernie Madoff, the original Ponzi, all of them happen during times of artificially easy money. So the government fuels these when people start to lose a bunch of money from all the fraud that took place because people were scrambling to put their money somewhere where it would grow and were attracted to the shiny thing that was growing way faster than it actually should be. And then everybody starts to lose their butts and the fractional reserve system starts to collapse when the inevitable bank run happens. The government steps in and says, don't worry, I'm here to help. Just last week, Christine Lagarde, in a speech about creating a digital euro, their CBDC, highlighted things like unbacked Bitcoin and Ether being too volatile. Stable coins that are completely unbacked are vulnerable to runs. It highlights the importance of regulation, the government coming in to protect consumers from the risks of the private market. Here's something for anybody who doesn't understand what the free market is supposed to do here. The free market means that people who perpetrate fraud and the victims of that fraud are both free to fail. That is the consequence of participating and being a victim of fraud. Is it unfortunate? Yes. What does it do to individuals moving forward? You're a lot more careful about where you put your money. Are the people who perpetrated the fraud going to get off scot-free? No, it's illegal. They broke the law. Nothing about that is changing. But you still don't need to introduce new legislation, new regulation, and co-opt the crypto markets after they've crapped and introduce your central bank digital currency as a way to rescue everybody. That's taking advantage of a crisis. It's not allowing the free market to fix the situation on its own and using existing laws to punish criminal behavior. Those are two very different things. And mark my words, they will not do the former, they will do the latter. They are absolutely going to use this as an opportunity to say, we need a CBDC. We need to take a stable coin that works. We need to co-opt it, create our own digital currency, and use this to make sure that people are not getting taken advantage of. Maybe this isn't the last straw yet, but at some point soon here, they're going to take a look at all the fraud that has taken place, the entire crash, the entire crypto market, and they're going to say, hey, look, this is why we need more regulation. We need to clamp down on everything that everybody is doing in this space because it's a wild west. People are losing their money, getting sucked into scams. People are too stupid to think for themselves and not smart enough to realize that my consequences of this action should prevent me from taking that action again. And then anybody participating in that would have to get far away from it. And it's a self-defeating thing in the long run. No, we're going to step in here. We're going to introduce a CBDC and force it down everybody's throats. And they'll just take it because they lost some money in the latest scam. Which is why you haven't seen any major movement from the SEC, from the CFTC, from Congress, from anybody on any regulation in this space because they want to make sure it's as Wild West as possible right now so that the whole entire collapse happens, so that the major players, the hedge funds, the big corporations, the large financial institutions can't get into it yet because they're saying we're not going to get into something until we know what the rules are. So they're making sure that it's all the players that are volatile and it's all going to collapse so that they can step in with an iron fist and say, this is how we want it to go instead. And the sheep will gobble it up. As Benjamin Franklin said, those who would give up liberty to get a little bit of safety deserve neither and will lose both. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.